Amira Blake here. Let me start with a question most investors are not asking yet. When you saw the headlines about airstrikes on Iran, did you think it was only about nuclear weapons? Or did you stop and ask yourself what this might mean for the balance of power surrounding Iraq's financial reforms? Because if you are an investor watching Iraq, especially the Iraqi Stock Exchange, the story unfolding right now may not just be military news. It may also be part of a much larger shift that could affect Iraq's sovereignty, its banking reforms, and the confidence of global investors looking at the country. Before we go deeper, remember this channel is focused on helping investors understand the structural forces shaping markets. This content is for informational and entertainment purposes only. I am not a financial professional, and nothing here should be considered financial advice. I do not have insider information, and I am not engaging in insider trading. Now let's break this down step by step. Recent military strikes targeted Iranian military infrastructure, missile systems, nuclear-related facilities, and in some cases specific leadership figures tied to Iran's military and strategic command networks. The official explanation given by governments involved is clear: prevent Iran from developing nuclear weapons and weaken its military capabilities. But geopolitical analysts always look at the second layer of the story, because in the Middle East, military power, political influence, and economic control are deeply connected, and Iraq sits directly in the middle of that equation. For years, Iraq has existed between two powerful spheres of influence. On one side is the United States, which has played a major role in Iraq's security structure and has strongly pushed financial modernization, banking transparency, and anti-money laundering reforms. On the other side is Iran, which built extensive influence inside Iraq through political relationships, economic networks, religious connections, and militia organizations operating inside the country. So when the United States targets Iranian leadership or military infrastructure, the ripple effects do not stop at Iran's borders. They extend into Iraq. Now here is where this becomes important for investors. Iranian influence in Iraq has never just been ideological or political. It also has economic implications. Some militia groups aligned with Iranian interests operate inside Iraq's security environment. Many of these groups are connected to economic sectors such as border trade, customs operations, construction contracts, and infrastructure projects. From the perspective of international investors, that creates uncertainty because when armed groups influence business decisions, markets become unpredictable. Institutional investors do not like unpredictable environments. Large investment funds managing billions or even trillions of dollars usually ask one question before entering a new market. Does the government fully control its own country? If the answer is uncertain, those investors wait. And this is one reason Iraq's financial markets remain small compared to the country's enormous economic potential. Iraq is one of the world's largest oil producers, yet its stock market is still considered a frontier market with relatively limited global participation. One reason is security. Another reason is political stability. But another major factor is influence. When outside powers shape decisions inside a country, investors often hesitate. Now let's connect this to Iraq's financial reform process. Iraq is currently working to modernize its banking system and integrate with the global financial system. The government and the central bank have been implementing reforms aimed at increasing transparency, enforcing anti-money laundering regulations, and building relationships with international correspondent banks. These reforms are necessary for Iraq to fully participate in global financial markets and attract large foreign investment. But there has been a major challenge. For years, some financial networks inside Iraq were used as channels to bypass international sanctions placed on Iran. Because of this, the United States Treasury has placed significant pressure on Iraq to tighten its financial oversight. This is one reason several Iraqi banks have faced restrictions on dollar transactions in recent years. So Iraq's banking reform process has been about more than modernization. It has also been about proving to international regulators that the financial system operates with transparency and compliance. Now think about this from the perspective of global investors. If you manage a pension fund worth hundreds of billions of dollars, would you deploy that capital into a country whose financial system might be used to bypass sanctions? Or would you wait until the system is clearly transparent and internationally compliant? Most institutions wait, and this is where leadership targeting becomes important. When military strikes remove or weaken specific figures responsible for strategic influence, command structures, or militia coordination, the networks connected to those leaders can weaken as well. This does not instantly erase influence, but it can disrupt command chains, financial channels, and operational coordination across the region. If those networks weaken over time, Iraq's government may gain greater control over internal security and economic sectors. That kind of shift matters because Iraq's economic reforms require strong central authority. The government must be able to enforce banking regulations, control border trade, regulate financial flows, and maintain security across economic infrastructure. When the central government becomes stronger relative to militia networks or external influence, reforms become easier to implement. Let me ask you something as an investor. What happens when a country transitions from fragmented influence to stronger centralized governance? Historically, that is often when institutional investors begin to reconsider markets that were previously considered too risky. Now let's connect this directly to the Iraqi Stock Exchange. For Iraq's stock market to truly expand, several major developments must occur. Foreign brokerage access must increase. Global investment index providers must include Iraq more broadly. Pension funds and sovereign wealth funds must feel comfortable allocating capital. These institutions manage trillions of dollars, but they only deploy capital where the political environment appears stable and predictable. If geopolitical dynamics shift in a way that strengthens Iraq's sovereignty, investor perception of risk could gradually change. That does not mean an immediate market boom, but it could create conditions where foreign investors begin paying much closer attention to Iraq's economic transformation. There is also a larger regional scenario analysts are watching. Imagine a situation where Iran's regional influence weakens over time. If that happened, Iraq could potentially emerge as one of the most important economic hubs connecting the Gulf states, Turkey, and the Levant. Infrastructure investment could expand. International banks could increase operations in Baghdad. Foreign partnerships could grow across energy, construction, and financial sectors. And if those developments occur, Iraq's financial markets could eventually expand far beyond their current size. Now let's be realistic. Geopolitical transitions are rarely smooth. In the short term, conflicts involving Iran can create instability. Militia groups operating in Iraq could respond. Political tensions inside Iraq could increase temporarily. Security challenges may continue for some time, so investors must always consider both risk and opportunity. But here is the key point many people miss. The real drivers of long-term investment are not headlines. They are structural changes in power, governance, and financial transparency. And when those structural changes occur, global capital can move quickly. Let's recap the big picture. Recent strikes targeted Iranian military infrastructure and leadership networks. Iran has historically held significant influence inside Iraq through political relationships, militia groups, and economic networks. Institutional investors prioritize sovereignty, security, and financial transparency before entering frontier markets. Iraq is currently modernizing its banking system and strengthening regulatory compliance. Sanctions evasion concerns forced Iraq to tighten financial oversight and banking transparency. Leadership disruptions in Iranian networks could weaken external influence across the region. If Iraq gains stronger sovereignty and security control, financial reforms may accelerate. And if those reforms succeed, Iraq's financial markets could attract significantly greater international investment. So here's the question I want you to think about. Are you looking at Iraq through the lens of short-term news cycles? Or are you studying the deeper geopolitical shifts that determine whether global capital flows into a country for decades? Because the investors who recognize those shifts early are often the ones who see opportunities long before the rest of the market notices. If this breakdown helped you connect the dots, like the video, share it with other investors studying Iraq, and subscribe so you do not miss future updates. And if you have questions about Iraq's financial reforms, the Iraqi Stock Exchange, or the geopolitical forces shaping the region, drop your questions in the comments. I read the comments, and many of the next videos come directly from the questions viewers ask. Again, remember this content is for informational and entertainment purposes only. I am not a financial professional, and nothing here should be taken as financial advice. This is Amira Blake, and I will see you in the next video.